What's up guys, welcome back to my channel. Today we're going to talk about a tool that I'm starting to use and I'm starting to love. It's called the Fibonacci Retracement tool. There's so many confusing videos on the internet about this tool. I'm going to try and break it down. Basically, the Fibonacci is used for entries and exits. I'll just explain to you in the video, but when there's a trend, it's very good to get in on a pullback, right? So you use this tool to get in on a pullback, right? And also it's very good to set your stop loss, very good to set your take profits. Stocks, forex, crypto, everything reacts so well to the Fibonacci. So yeah, this is just another tool for your arsenal. Nothing beats price action, nothing beats naked charts, okay? Nothing. But tools help, and this tool is amazing. So let's get straight to the video. I'm going to try to make it as simple as possible. I'm going to give you the settings that I use. I'm going to show you how I use it, and yeah, I hope you enjoy. So basically, what is Fibonacci? Fibonacci is a tool to get in pullbacks. When there's an uptrend, there is always a pullback before continuation upwards. The Fibonacci helps you by giving you levels before price continues up. Don't worry, you're going to see it live time. I'm just doing this simple drawing to get your mind onto what the Fibonacci is, right? So it's a tool to get in on the pullbacks. Uptrend or downtrend, doesn't matter. When price goes down, there is a pullback and then continuation down. How do you know when to get in? The Fibonacci gives you the levels where price is probably going to reverse before continuing down. Now let's go into the charts and you're going to see it there better. Okay, so the first thing I want you to do is to put the settings the same as I have them. The normal fib is very ugly, and let's just keep it simple. Trading, the simpler you keep it, the better it is. Now, if you're using TradingView, it doesn't matter if you're not. If you're using a broker, I guarantee it has the Fibonacci tool, which is this one right here. So fib retracement, this one right here. These are my levels and these are the only ones you need. So let's go into the settings and you can copy exactly my settings. So we have the 0, the 0.382, the 0.618, the 1, minus 0.27, minus 0.618. These two are your take profits. Then we have the 0.5 and the 0.786. Now I'll explain to you what every level does. So yeah, just copy this. Okay, so let me give you an example of how the Fibonacci works, right? Let me go on replay mode. This is a Euro USD. Like I said, it works on crypto, works on forex, works on stocks, works on everything. So let's go on the replay mode. Now Fibonacci catches impulsive moves, right? So an impulsive move means a big move upwards. For example, here we were on a downtrend, then all of a sudden we've gone back up impulsively, right? So we have a resistance right here. Fibonacci is to be used along with key levels. I will do another video on key levels, but it's in the course, or if you're not in the course, don't worry. You should know what a key level is. It's basically a level of support or resistance. Fibonacci is a good combination to use with key levels, right? So we have an impulsive move right here. What you do is, if the impulsive move is in an uptrend, what you do is you get the lowest point where price has touched, which is right here. You drag the Fibonacci up and you put the 0, not the 0.618, the 0 to the highest point. Okay, so this was an impulsive move. Now you want to get in on a pullback. You want to wait for price to hit either the 0.382, and let me make it clear, okay, I'm not going to be like the other guru traders on YouTube which are going to tell you it's going to hit the 0.382 before carrying up on up. No, there's a chance it hits either the 0.382, the 0.5 or the 0.618. These three levels are your pullback areas, right? So if, for example, you get in on the 0.382, place your stop loss below the next level. There's a chance that price will break the 0.382 and carry on to the next level. I'm going to show you how to make sure that it's a true reversal and a true pullback. So like I said, price will pull back to any of these levels. We can look left and see that before, previously, the 0.5 has been an area which has been respected. Okay, it's been respected. You see it when you look left. You can see here how price respects the 0.5. So likely we're going to see price pull back to the 0.5. So okay, here we can see it hits the 0.382. A lot of you might get in here, right? I wouldn't get in. This green candle hasn't overpowered the left candle, right? So it's a weak bullish candle. You could get in. If you don't have experience with price action, you could get in. You need a loose stop loss if you're going to enter, especially at the 0.32. I prefer any of these two. Okay, any of these two is a better pullback. So let's say you entered. As you can see, price pulls back to the 0.5. To the 0.5. Now, let's keep playing. Right, So this candle now, it gets interesting. We have 1, 2, 3 touches of the 0.5. Then we have a dragonfly doji, right, which is a bullish candle. If you don't know about candlesticks, I suggest you learn about them. I will make a video on candlesticks. But anyway, let's keep it simple. You wait for a pullback to any of these levels. Now you can enter, right? Now you can enter. So your entry is right here. Your stop loss, if you want to be conservative, and if price isn't that far away, you can put your stop loss below this 0.786. This is a safer stop loss that you can have. Me personally, very rarely do I go down to the 0.786 unless price is close. If price is not close, I can place my stop loss around this area, right, to give it space to breathe. We clearly have 3 touches of this level. If this level breaks, there's a chance it's gonna break through. So we enter here. Our first take profit is here, and our second take profit is here. So let's see if this trade is a win or not. I haven't back tested this by myself, so I'm not sure. I would have entered here. Again, let's recap. The lowest point, the highest point, you wait for a pullback to either the 0.32, the 0.5, or the 0.618. In this case, it's a 0.5. So let's press play. As you can see, price wicks exactly to our take profit 1. What do we do here? Take partial profits, move your stop loss to entry. You now have a risk-free trade and you've taken partials, right? This is the power of the fib. Look how price has respected the 0.27 to a T. And if we look left, we can see that we have a area of resistance right here, right? So what you can do is that take all your profit, or what I always do, take around 80% of my profit and leave some running. This was a 1-to-4 risk to reward trade, by the way. So we keep playing. As you can see, price is having trouble with a 0.27. You're still in the trade. Yeah, boom, right there. You're seeing it live with me. Price has literally hit your take profit too, right? So this trade was a big win. It's literally hit your take profit too. You exit the trade. By the way, this is hourly time frame. Another thing I want to talk about. Listen, you can use this on any time frame you want. I like it from anything from the 15-minute up. Preferably, I use the fib more on the 1 hour, right? You can use it on the daily, but keep in mind, the daily is more of a swing trade. You can wait 1 or 2 weeks for price to reach fib levels on the daily. The daily is a lot slower. If you're an intraday trader, you can use the 1 hour or the 50 minutes, even the 4 hour. So it all depends if you're looking to swing trade or day trade. The same method for everything. This trade was a huge win. You can clearly see here how price respected this area right here, right? This area right here was respected. Now these two, the 0.5 and the 0.618, are the areas you're going to see most respected all the time. Before hitting your take profit 1, bouncing back to your 0 level, which is also a support, as we can see when we look left, and then it hits your final take profit. It's a beautiful tool. This would have been an amazing trade. I hope you get the gist of things. The Fibonacci is not a hard tool to use. There's a lot of confusion out there. Okay, just simply put the settings that I've shown you right here and back test it yourself from the lowest point to the highest point on an uptrend. Then on a downtrend, it works opposite. So let's do it on a downtrend. So here we have an impulsive move. So we've done the replay tool. You're new to this trade. Let's imagine that this is a trade now. Right, so we have a big move downwards. You've missed this move. Why would you open a sell here? You're going to open a sell here and price is going to reverse. You need a pullback. So from the highest point down to the lowest point, okay, and you're looking for a reversal, preferably on any of these two areas, the 0.6 and the 0.5. Sometimes on the 0.32 price will reverse, okay? Don't get angry. Ideally, if you want to be safe, wait for these two areas, the green levels. You be patient and you wait for a pullback. No entry yet. Right here, price is reversing on the 0.32. If you want to enter, feel free to enter. Your stop loss though has to be above these two levels, because there's a chance price is going to retrace to here. If price retraces to here, you don't want to be stopped out because it might reverse back down. The only thing is, if you enter here, you didn't get the best entry possible. Now if it goes past this level, do not even think of entering, forget the trade. So let's be patient and wait for the green area to be hit. Boom, now we can start okay, there we have a clear entry. We have a tweezer top right on a resistance area. Price rejected this area, so we can enter here a short position, right? That would be our entry right there, because the candle closed there. Our stop loss can be above the 0.618, and our take profit can be all the way down here. This is the first take profit, this is your second take profit. This is a 1-to-4 risk to reward trade. So let's see what price wants to do. So you enter a short position. That's your stop loss right there. Now you just stay patient and you ride the trade. If you get stopped out, you get stopped out. As you can see, you need patience with this trade. But still, price is not breaching. Boom, that caught me by surprise, man. That even caught me by surprise. Huge bearish candle right to a take profit too. Amazing trade. These are the trades that count. Okay, you're seeing it live. Our entry was here on the 0.5. Our stop loss is above our next fib level, which is also an area of resistance. If there's an area of resistance or an area of support, you place your stop loss right above. If it aligns with a fib level, even better. So here we have another huge win. After your take profit 2 is hit, exit. Yes, price may continue to go down, right? If you want to stay in the trade, the least you can do is take most your profit and let the rest run with your stop loss at entry. Price continues down, and an amazing trade, When these trades happen, you can have confidence, you know what I mean? Like, you can enter confidently. If you have a support, you have a resistance, plus you have a fib level, you can enter comfortably. So now what I want you to do as a test when you enter this video is put these settings on your fib and start back testing. If on a downtrend, an impulsive move from the highest point to the lowest, you wait for a pullback and you enter. On an uptrend, it's the opposite, right? So on an uptrend from the lowest point, an impulsive move, we have a big green candle here. So let me just show you again this example just to recap one more time. Okay, so we have a big impulsive move here. Our fib goes down here. Our zero level goes here. We stay patient until we get a pullback. There we go. So we have a pullback. We enter a long position right here. Our stop loss goes below the 618, or if you see there's a level, like for example I'm seeing there's a level right here. So yeah, your stop loss, listen, a lot of people I see say put a 20-point stop loss, put a stop loss 2% away. No man, put your stop loss around structure. Put your stop loss around structure. We have clear structure here. Why would I set my stop loss here when I can just do this and it's still an amazing trade, right? So our take profit goes here. Our first take profit here, second take profit here, and we just play the trade. Price gets close and we have to be patient again. Our stop never gets touched. We have to have confidence. Listen, if you're in the trade and you feel like exiting up here when it's right close to the take profit, you can exit, right? You can exit. Just don't get angry if price does what it was meant to do. So as you can see here, first take profit is hit. Now what you do is you put your stop loss to entry and you ride the trade. We're probably going to get stopped out. Yep. So here we got stopped out at entry, but we still took our profit right here. Nothing is 100%. This is just another tool, an amazing tool for quick trades, you know what I mean? Or even swing trades, whatever you want. Try to incorporate it. If you see an impulsive move, like a big move down or big move up, or if you see a support and resistance, I want extra confirmation, then use a fib. right? Use the fib and it will pay, right? Now another example here where price pulled back, nearly hit take profit 1, and every trade is different. Okay, you need an eye for every trade. If you see that price, for example, is getting close to a take profit and you want to take your profit and you're happy with it, then take it. As you're going to see when you start using the fib, the levels mostly always align with a resistance or a support. So for example, here we have a support and here we have a fib level. It's a self-fulfilling prophecy, just like every other form of technical analysis. A lot of people use Fibonacci, right? So, and a lot of people, if you go on any course or any book, you read anything about fibs, you're going to see that they use these levels, right? So these are the levels you want to use, because if a million traders are seeing the same levels as you and they all press buy, the market will move by itself. It's a self-fulfilling prophecy. Banks, people with big money, retail traders like me and you, they all use these levels when they use fibs. So it's just a very, very good way to follow the fish, follow the flow. You know what I mean? Like I said, if a million people are seeing the same thing, the 0.5 being touched, they will buy or they will sell. So you just follow them, right? Just another tool that you can add to your arsenal. I'll be making way more videos. I hope you enjoyed this. Make sure to like, comment and subscribe. Listen, my job is to help you as much as I can in your journey. Comment down below, tell me what else you want to see, and I hope this video makes the fib clear. As I said, you can use the daily, but just be aware that the daily is going to take ages. One candle is 1 day, so you have to wait a few days for it to hit these levels. What I do is, if I'm on the daily, I pull up a fib and it's already at a level, I will enter and I will swing trade it for 1 week, for 2 weeks, right? I will swing it and make money. Same way as I do when I'm intraday trading, just in a longer time span. You can use a 50-minute, you can even use a 5-minute, use any time frame that you want. Here's an example of the 5-minute chart. We have an impulsive move right here. Price respects, again, the 0.618. So you'd enter here with your stop loss just below the level, or if you want to be safe, below the 786. And this trade was also a win because it's close to the take profit. You would have entered here and that's a big move up, right? So you're going to make money either way. You can also combine this with moving averages. If you know me, you know I like using moving averages. You can watch my EMA video that I'll link at the end of this video. But yeah, it's all about getting the right confirmations. If you have price breaking above an EMA, or you have an EMA crossover plus a fib level, you can enter confidently. So yeah, keep trading simple and it will pay.